Apple stock is range bound. Here's a few reasons why. News broke recently, once again, about an Apple car. But as it's pointed out in this article from Barron's, this latest round of rumors about an Apple car amounts to the boy who cried wolf one time too many nursery tale. And Wall Street has looked at this story basically as that, with a high degree of skepticism. Apple stock moved up, not quite 10%, but has now retreated back to the lower end of its most recent range, which it's been in, actually, for the last several months. So point number one is the Apple car story is being treated with a high degree of skepticism, and it hasn't been the driver that people have expected. A second reason is that the services offerings have become a bit weak. The first of these is Apple Fitness Plus. We tried Apple Fitness Plus. We decided to can it. The reason why we decided to can it was we don't have a treadmill, nor do we have an exercise bike, and there's nothing for someone like our family, or a family like ours, in Apple Fitness Plus to justify the charge. We're not alone, as you can see from this review. The app itself, or the service, is considered to be less than spectacular. Let's put it that way. The third reason is Apple TV Plus, another service offering, is also weak. Apple TV Plus has struggled and struggled and struggled over the last, its short existence actually, its 2 or 3 year existence, to find the type of compelling content and the niche, the consumer niche that feels most comfortable. We subscribe, again, referring to our own household, we subscribed to Apple TV Plus originally, and then we canceled it. We found it to be quite millennial-centric in terms of the lineup of shows, with not a lot of stuff for us. And we then decided we don't need this. With Apple TV, with the Apple Family Plan, we found a reason to go back into Apple TV Plus, and also, admittedly, the content is a bit better for us than it was on the first pass. But nonetheless, it's not a spectacular offering befitting a company of Apple's heft in this market, the streaming market. The third reason is Apple seems to recognize the weakness of the services offerings and has actually decided to provide extended trials, as you can see from this scrape. That doesn't bespeak a lot of confidence in consumer willingness to pay a good dollar price for these types of services offerings. So we've taken a look at Apple, and we see it bound in this range, and actually its performance is akin very much to a passive ETF, for example, tracking the S&P 500. So based as a single equity play with the risk inherent to that, we don't think there's a justification for Apple where the intention is for heavy growth. My name is Ira Michael Blonder. I'm the CEO and founder of IMB Enterprises Incorporated. My company is an advisory firm. We work with early stage enterprise software businesses. We've worked with one for over 10 years with a credible offer in the digital adoption space. The name of the company is Visual SP. We've worked directly with the CEO, and we've compiled a lot of experience over that 10-year tenure, working with very large organizations in the public and private sector. I'm also an investor with a keen interest in technology. Please check out our blog, https://www.imbeenterprises.com/our-blog, and or check out my Twitter page at Mike the Bebop. Speak with you soon.